Bitcoin whales, after this bullish reaccumulation process, seem to have already reached their second institutional target. In other words, these whales have already secured their profits. So, is it wise to keep buying into the crypto ecosystem, even as we see the market constantly surging higher? Let's start briefly with the SHIB 500 chart, just to point out that we are currently at an all-time high. It's true that everything appears to be forming into a wedge, an event that, of course, deserves our attention. But for now, the only thing we can say is that this index and this asset are experiencing an economic boom. Therefore, we must continue to support this bullish outlook. There will come a time, eventually, when things change, but as of today, we need to remain optimistic. Just look at the Nasdaq index, again at a historic high. And as I've been saying, were we to go against the traditional market? Honestly, it seems like Donald Trump's rise to power is being very well received by traditional investors. Now, let me show you on screen a recent meeting between Donald Trump and the CEO of Crypto.com. Crypto.com had an open dispute, a lawsuit against the SEC. And guess what? That lawsuit has been withdrawn. Coincidentally, around the same time this meeting took place. According to the press release, Donald Trump and Chris Marszalek were discussing the president-elect's proposal to launch a national Bitcoin reserve and make appointments in his administration linked to the cryptocurrency industry. Look, we don't know exactly what they talked about. This is just what's being reported and rumored. However, it seems quite clear that if Crypto.com had a lawsuit against the SEC, and after a visit from the future president, who is set to take office in January, the serious company decides to drop the case, it's not just a coincidence. All of this points to Donald Trump seemingly being genuinely friendly toward the crypto ecosystem and the positive impact this could have for the industry. So, there's no doubt we can celebrate this news simply by looking ahead. And speaking of looking ahead, we're here to analyze or answer the question, how good of an idea is it today, December 18, 2024, to keep adding long positions at this point when we look at the daily chart? Before I give you my take, I'd love to know your opinion in the comments. Go ahead, take a guess. As I was telling you in previous videos, this macro bullish channel was something we had already been speculating would break upwards, and that we would eventually discard this structure. And now, here we are. It's completely disposable. For those who are new, you should know that these structures, of course, are not infinite. If they were, Bitcoin would be stuck in this range forever, which, as we all know, is not going to happen. That's why we made our big bet weeks or even months ago, predicting that this structure would eventually be abandoned. And as I mentioned in the last video, it was very likely that by the next one, this video, we'd be talking about leaving that structure behind. Now, let's think about what comes next. Here we have a bullish impulse, and this is its replica, a replica that, if you look closely, has perfectly reached its harmonic. This is giving us some important signals. As we know, the market moves through impulses, corrections, and replicas, and what we're seeing is that Bitcoin appears to have reached its harmonic. This is a significant event. However, this doesn't necessarily mean the party is over. Far from it. We're not making that claim, not at all. But at the very least, it's signaling to us, cautiously speaking, that making long-term purchases, buying in spot markets right now, might not be the best idea. Let me explain this hypothesis. Take a look. We know that major institutions operate through accumulation processes, but apart from accumulation and distribution processes, there are also phases of reaccumulation or redistribution. And what we're seeing here is a very clear redistribution process. The market had already been on a strong bullish trend. It entered a range, a pause, to load up on more positions, allowing them to continue the movement later on. Well, this morning we recalibrated the projection for this institutional target, and naturally through this recalibration, we identified that the second institutional target might be exactly where the price has already visited. Of course, we're not going to argue or try to pinpoint the exact line. It could be here, there, or somewhere else. It doesn't matter. At this moment, we're not looking for that level of precision. What we're focused on is gathering information that can help us make better decisions in the future. All right, we all know we're currently in a Z crypto phase. Here we have an inverted bearish impulse, forming a W, a weak Y, and now we're in a Z. And as you already know, you don't want to go against a Z. What this means is that if it decides to keep going, it simply will, and nothing has changed. That's the reality. At Crypto Insight, what we prioritize isn't just the bullish harmonic that has already reached its replica. That's important, sure. We don't put too much weight on this impulse completing its replica either, nor on reaching the second institutional target, though both are significant. Where we place the most emphasis, because it clearly explains price behavior and short-term intentions, is on understanding how major institutions work through complex corrective patterns. In other words, we're prioritizing tracking this Z, as it will be the first indicator to show us whether the rally continues or not. If in the future it signals that the rally is over, Then we'll shift focus to the second institutional target and the replica level. But since the Z still holds, I'd say we remain optimistic about the crypto ecosystem for the medium and long term. At this point, we don't have confirmation that the market must decline. Now, let me explain how we can interpret whether Bitcoin and the crypto market will keep rising or start falling. It's clear and I'll show you. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Let's keep exploring the crypto ecosystem. Right now, you're looking at Ethereum's daily chart. Take a good look. It's the full chart. And honestly, it looks very promising. In previous videos, I've already explained the key elements of this chart. If you haven't seen the last video, I invite you to watch it after finishing this one. So let's focus a bit more on what's happening recently. Just like Bitcoin, Ethereum is also in a Z phase, which suggests upward movement. Now, if we switch to the 4-hour time frame, we see the hypothesis, the possibility of a potential wedge breakout. The question is, will this breakout be genuine? For it to be legitimate, we'll need to see immediate declines. Why? Because otherwise, it could simply be a false breakout, and the rally might just continue upward, with the wedge needing recalibration. That's the nature of a wedge. When will we know if the wedge is correctly drawn and has truly broken? Like I said before, you need to see a very aggressive drop. So far, we haven't seen it, but we're keeping an eye on it, monitoring closely. In the same way, we've already identified the trend line of the Z, in case they decide to break it, so we can understand how far this initial drop could go. We're currently looking at a price level of $3,520. As you can see, if they decide to break downward and we reach this level, it wouldn't be the end of the world. They could work within this range, but the Z could still continue. Let me explain. Even if we see a bearish move in the immediate short term, it's not catastrophic, far from it. In fact, we don't know if this drop will even happen. We have no clue, and neither does anyone else. Don't let anyone fool you. But what we are prioritizing in the Z phase is looking upward. And as I've mentioned, I'll later explain what to watch for on the chart to shift from a bullish to a bearish outlook. For now, as you know, we're still leaning bullish. Take BNB, for example. Here, we've already broken the wedge and correctly identified the Z trend line. This is the wedge that broke. As you can see, it hit a structure we know how to identify well. Now we're in the classic post-wedge breakout defense zone. This is where we determine whether there will be new attempts to breach the structure, or if we'll end up seeing a bullish rally. Considering the long-term analysis, let's switch back to the daily chart. The key takeaway is that as long as BNB doesn't break below the structure around $644, there's no cause for concern. While in a Z phase, the price can keep rising immediately. They could also threaten or set traps in this range but still continue climbing shortly after. From a macro, long-term perspective, we remain bullish. In fact, you can't get more bullish than with XRP or BGB, the Bichik token. Just look at these tokens. They've skyrocketed in an unbelievable way. Starting with XRP, honestly, it's shattered all expectations. What this token is doing is completely insane. All we can do here is track its upward trend. That's why we've marked a defense zone around $2.19 on the 4-hour chart. As long as this level holds, we can remain optimistic about this token. That said, I'm not entirely sure I'd recommend seeking entries in such an overextended asset. But if you want to join the party, you know exactly which structure you don't want to see break. To stay optimistic, remember that we remain bullish on the crypto ecosystem. If tomorrow we spot something in the charts that suggests otherwise, you'll be the first to know. As I was saying, the BGB token has been absolutely incredible. A real standout. Let's calculate its gains. If we measure from its starting point in early November to its peak, we're looking at over 300%. That's just unbelievable. Now, let me give you the same advice as with XRP. It's been a fantastic asset for those who got in early. They've had a great ride. But if you're asking whether you should buy now, at these levels, honestly, a rational and clear-headed analyst wouldn't advise it. It's simply not logical. That doesn't change the fact that we remain positive about the crypto ecosystem overall. And this isn't just a belief, it's based on what the charts and structures are telling us. If we're staying optimistic, that means cryptos can still go up. Under this hypothesis, how can we rejoin BGB, the Bichik token? We've identified a defense zone around $2.99. If the price offers a pullback to this area, at some point, it could be an interesting entry point to ride the bullish trend alongside Bichik investors. But yes, what BGB has achieved so far is truly extraordinary. Now, let's focus on something important, what we're seeing on the charts for BNB, Solana, and Cardano. They're all telling us practically the same thing. These assets like BNB, Cardano, and Solana suggest that if we're in a wedge within a Z, that could have broken out, but whose trend line hasn't been breached. It invites us to remain positive about the crypto ecosystem as long as this structure holds. For example, Solana is showing us the same pattern, a Z phase with a wedge that has broken its structure. Here we can see the Z trend line, which I mentioned in the last video. If Solana loses its structure, I wouldn't be surprised, nor would I interpret it as a signal that a bear market is starting. Not at all. It could simply be one of the few cryptos that might show some level of decorrelation. But at least I can tell you that, in isolation, as long as Solana doesn't lose this structure, we remain bullish on Solana. The same applies to Cardano. We've identified a defense zone, and as long as this level holds, we'll stay optimistic about Cardano as well. Now, going back to Bitcoin, that's why I'm telling you that as long as the $90,000 price level isn't broken to the downside, we can continue to be optimistic about the entire crypto ecosystem and prioritize this bullish direction. That said, there's a big asterisk here when it comes to long-term buys. If you're asking whether now is a good time to buy, the answer is definitely no. Right now, at an all-time high for crypto, it's not a good idea to buy for the long term. The best move would be to wait for some kind of corrective pullback, if it happens, and take advantage of those corrections. These would represent market extremes and could be great opportunities to go long on crypto. However, if the price drops further, it could invalidate the current trading idea and even signal the start of a bearish phase. Not necessarily a long one, but bearish nonetheless. To make the message clear, we're prioritizing and maintaining a bullish outlook. Imagine I'm drawing a giant arrow across the screen. We're still bullish. Now, tell me, what do you think about the crypto market? Let me know in the comments. And if you enjoyed this advanced technical analysis, give the video a like, subscribe to the channel, and click on the notification bell so YouTube can alert you to future updates. Also, share this content with your friends and other trading and crypto communities. Good luck with your trading, and see you next time.